If you've ever started counting down the days to Thanksgiving several weeks early, go ahead and hit that like and subscribe button. Folks, welcome back to another episode of Benzinga's Market Edge Live. We are waiting on the PPI here today. We did have Disney earnings to talk about, but otherwise kind of light news flow. So I'm sure we're going to go over some tickers today. Good morning. Get your coffee. Get ready. It's time to roll. All right, folks, it's great to see a whole bunch of returning faces. Hugh, Alan Watch, Jay Harris. Awesome of you to join us early. The early bird gets the worm, or in Jay Harris's case, the chicken. Good morning, eat more chicken. Good morning, Jay Harris. It's good to see you. Russ, Paul, welcome. Hopefully you all are doing well and had a great evening last night. Let's go ahead. Cam, AJ, welcome. Let's go ahead thinking about it. Good morning. All right, we got the whole crew in here. This is awesome. All right, let's go ahead and take a look at the SPY here today. You know what? Let me close my door a little bit. All right, let's start by taking a look at the SPY and get set up with where we're at here. Still kind of moving sideways here. We'll see if the PPI actually moves the market here today. Judging by what the CPI did, I don't know how big this print is actually going to be here today in terms of moving it, but we'll wait. We'll see. That comes out at 8:30 Eastern, so just about 28 minutes from now. Where we sit right now, 597.19. One of the things I said yesterday in the happy hour show after the market closed here was that this candle yesterday, this little doji, it kind of gave me a gut feeling like the market might spring higher a little bit. Now, we are just fractionally higher than where we closed yesterday. The SPY was up a little bit more in the pre-market, however, so we'll see if we get any type of buying action here today. If the PPI does pop this, we'll have to see if that pop holds or if we sell it back. Yesterday, when we had the CPI, we actually sold it back a little. So we'll see what happens here today. We're still above the trend line. We're still just shy of all-time highs. Market really doesn't seem to have much chill at all. 67 on the RSI. So really a pullback wouldn't surprise me, but the buy the dippers, the bulls, they have been in control since the election, and that is still the case here. Let's see. Good morning, everybody. Hustle and bustle. Someone screwed with the lunar news release, saying it was a miss and a decrease from a year ago when it was up big. Disney had an amazing quarter. Actually, I believe Disney said that was one of their best quarters ever, Sadaf. So they did have a really good quarter. Why don't we dive into that right now? I don't know that there's really much else to talk about the broader market here until we actually get that PPI print. We're going to have Tim Melvin on. Normally we have Tim Melvin on Wednesdays. This week we have him on Thursday, so he'll be joining us here shortly. We can ask him about some of those things as well. But in any case, let's go ahead. Let's just talk about Disney. Let's dive right into Disney right now. That's probably the big earnings report of the morning. We can do Cisco after. Cisco, of course, reported earnings last night. So we'll take a look at that next. But here's Disney. So as Sadaf was saying, had an amazing quarter. Indeed. So Disney here, let me get the news feed. We'll come back to the chart here in just a second. But here's your news feed here. Disney top and bottom line beat. The core subs were up 4.4% year over year. Fiscal year 25 and beyond forecasts for double-digit growth. So that's all the news that we're getting here out of the news feed. Again, really good. The interesting thing about this is that I think it's going to be the future targets for double-digit growth that's really moving the stock. And the reason that I say that is because when this first came out, it actually sold off, and it actually just went right through 100 to the downside. Looks like it kind of bounced around, 95-ish, 95 and change, 95 and a half. But it barely stayed down. I mean, it reversed fast and reversed pretty hard. And now here we are right up about around 112. Just north of 112. Now, when we look at the daily chart here on Disney, this is actually a pretty bullish setup here for the day. So first things first, I know that a lot of people like this company as kind of a longer term hold, the whole 9 yards. I'm sure when Chris shows up today, we'll be able to get an opinion from him. I know he's worked at Disney, he frequents Disney, the parks, the whole 9 yards. But as far as the setup here today, I actually think this could drift higher here today. So as far as short term trades or day trades, even this might be one where you take a look at some calls and see if you can get some gains here on a Disney short-term day trade. Yesterday's candle took us above the 200-day. We had actually talked about Disney yesterday in the morning. We said, hey, or I was saying, hey, we're right here at the 200-day. Are we actually going to pop above and break that? Or are we going to come back in and maybe fill some of this? I think I actually gave you this gap fill as a possibility if it comes in. Well, yesterday we traded up almost as if someone or a group of some people were anticipating pretty good earnings here. And then we closed above the 200-day. So already prior to the earnings report, pretty bullish setup. Now we get the earnings report. And as you guys were already mentioning, it was an amazing quarter. Iger, I believe, let me get the exact quote from Iger here. Let's see. It was right in here. Bob Iger said in Q4, we saw one of the best quarters in the history of our film studio, improved profitability in our streaming business, and record-breaking 60 Emmy Awards. So there you go. That's likely also driving this here. Now, if we go back to the chart, and we take a look at where we're at here, we're actually just shy of filling this gap back from May earlier of this year. So first things first targets here. If we do continue to trade up, your first resistance point is going to be the bottom of this candle, and that's going to be at 114.15. So this is likely the next target. Now, we're not far from there. So we'll see if this ends up holding here. Worth noting, just in case that doesn't work, the bottom end of this gap here is 107.5. I wouldn't be shocked if it found support there, if Disney kind of came in a little bit. But again, my thought here, at least early on, is that we might actually kind of drift higher today, especially if the PPI print fires the market up, or fires the bulls up, I should say, in any degree. But if we do get this 114, the next thing to do would be break the top of this candle, and then we might be able to challenge some of these 123 highs in here. If we take a look at that 123 level, you can see this pretty much goes back to the summer of last year. I know we were a little bit higher than that, but the setup here, pretty good for Disney. So I have no position going into today. I would not necessarily be opposed to trading calls if I felt the setup was really good here. Maybe we'll do a little bit of stock as well in the prop account. We'll see. We'll see how that works, but that's basically the setup here on Disney. Sadaf, or anyone else really, if you have any trading plans, trading ideas on Disney, I'd like to hear them. Let's break down some of those trades there, or some of those trade setups, if you will. Now, the next stock that reported earnings here is going to be kind of a legacy tech company. This is going to be Cisco, ticker CSCO. And definitely an AI angle here, but this stock, again, with it kind of being legacy technology, this is not one of the sexy names like NVIDIA or TSM or even AMD back when that was hot. So looking at the chart here, we'll get to the earnings here in a sec, but looking at the chart here, we do seem to be at a pretty key level. We stopped shy here in September of 2023, and this area was clearly an important area going back to the fall of 2021. So I really would like to clear this area out if we're going to make a run for this, 64 and change high here. And that, I believe that is its all-time high as well. Let's see, unless there was no. Okay, so back in 2000. Okay, well, we'll deal with that when we get there. Here on the monthly chart, though, this formation pretty good. In fact, I'm going to actually go ahead and draw a trend line on here because we were taking a look at this also. This trend intact, really good. And then you can see exactly how important this level is going back several years. So let's zoom back into the daily here. So again, we'll see if we end up breaking that here. RSI is a little bit high. See if it's able to hold there. If we take a look inside, you can see Cisco popped yesterday, really kind of drifted back in, but the buyers are stepping back in. So again, seems to really be struggling with the level that we're at. Now, as far as the report itself, it was a beat on the top and the bottom line. And the big news here is that they actually raised guidance as well. All right. So strong beat, strong start to the year, customers investing in AI and more. raised guidance. And they also mentioned that their new AI server starts shipping next month. So all really good stuff there. This morning, I did see some more price target raised. Looks like Goldman Sachs and Barclay both increased their target here today. Citi, UBS, Bank of America, Morgan Stanley, and Evercore all went higher here on Cisco. So good report. Raised guidance, analysts giving you the backing here today. Cisco currently in the pre-market down 1.5%. So we'll see if this makes a red-green move here. Again, kind of one of the slower movers, but this is what's going on here with Cisco. Let's see. Good morning, Ryan. I was yesterday, no phone. Okay, I wake up to see my Rocket Lab went to the moon. We're going to talk about Rocket Lab. We are going to talk about Rocket Lab. There is no try. I did a lot of engineering work for Cisco data center design. So you can tell us then maybe how involved Cisco is going to be with some of the data centers. I'd like to get your opinion, kind of a bullish or bearish opinion on Cisco. Not a stock that I trade very often at all. So I don't necessarily have a line on it. And thinking about it, says Lunar is pushing up. Up we go. Okay, we're going to talk about some of those. I don't have a lot here, so let me roll through the earnings, and then we'll go over to Lunar. In fact, let me start making the list here. You had Lunar. Wasn't there another one that somebody suggested in their stock earlier? Disney. No, looks like we got them all. Okay. And then let me know also what stocks you folks want to take a look at today. Throw out some tickers. Like I said, we're going to have plenty of time for ticker time here this morning with kind of a lighter news flow. All right, let me keep running through. There are just one more earnings report, and then I wanted to check in our good old friend SMCI. We'll do that real quick. Next one here is Beazer Homes. One of the things the Happy Hour group does is they often will kind of watch some of these home builders and some of these real estate companies like Zillow or Open Door, just to kind of gauge how the housing market is. Beazer here, strong report, beat on the top and the bottom line, and it's really teasing this 34 breakout. You can see like right here, this 34 to maybe 35 area. We're currently at 34.50. So Beazer here, ticker BZH, we might have a breakout. Pretty nice formation, pretty nice little triangle formation up here. This sure looks like this wants higher to me. If we take a look here in the pre-market, you can see we actually had a range carved out to 37 based on these earnings. So we'll see where Beazer Homes goes here today. Okay. Oh, you guys are awesome with the tickers there. MSTR, no surprise to see that on there. That also might be another trade idea here today. How's Bitcoin doing this morning, by the way? Real quick check in on Bitcoin, 91,630 on the futures. So doing a really good job holding that 90 breakout. We can also look at Mara. That's no problem at all. Just adding these to my list here. And then Meta. AJ, you want to take a look at Meta. Okay, we can do all of that. And then 3M. MMM. And then Richard, you want to take a look at Seadrill? That's a long time since we've taken a look at that. That better not be a penny stock. That's all I have to say. That better not be a penny stock. It's not. Okay. Oops, that's the wrong. Okay. Let's take a look really quickly at SMCI. I know that's been kind of wild here. And guess what? It is almost at our target. So we've been asked a lot about SMCI recently. We've continued to watch this decline after just a meteoric rise. Obviously, the backside of this move has been ugly. All types of accounting issues. Letting go of an independent auditor. I mean, it can't really get a whole lot worse. It can't really get a whole lot worse than that. But now we have another earnings report that they're unable to file. Lower we go here. And finally, we've broken into the teens. So we had a number of people asking, where do we think the possible buy spot is? Happy Hour has been watching SMCI since this thing has really started to break down. And the consensus here has been anywhere between 15 and 17. If we zoom in going all the way back to 2023, you can see that this gap, we're in the middle of this gap right now, and this gap fills down here at about 16 and change. I wouldn't be surprised if this came in even a little bit more. So this is kind of the spot that we're watching. I'll be honest with you though, folks. I mean, if it's not a short-term trade or if it's not a day trade, I don't know why I'd really want to select SMCI as my trading vehicle. With other stuff like Disney and just kind of other companies that aren't really in big trouble, I think that those make better trading opportunities for us anyway. So just wanted to mention here, SMCI extremely oversold, but finally approaching that area that we've been waiting for between 14 and 17. So we'll see if we end up getting that here today. Okay, about 14 minutes until we get Mr. Melvin on here today. Let's start rolling through some of the other tickers that you were suggesting. Lunar is going to be the first one. I guess we might as well put Rocket Lab next, right? RKLB. I'll go ahead and add that. Here is Lunar, and boy, we continue to blast off. So Lunar, Intuitive Machines are trading higher. The company reported Q3 EPS results. Let's go ahead and into the news here. Bang. So it looks like a miss on the earnings report. Looks like the sales missed. No, the camp Q3 sales. This is, I don't know if this is correct. I don't know. I don't know if the miss label here is correct. Looks like the sales. How is this? Am I reading this right? 58 million. 58.47 million misses the estimate of 50.8 million. That doesn't seem right to me. Anyway, no, it's wrong. Yeah, it has to be. So, and that doesn't make, sorry about that. Kind of doing this live. That is confusing. So it looks like they did report well on sales here. Reports revenue above the consensus. Net loss down from its net income year over year. This seems really good. Market seems to be rewarding this. This is now up 15.5% here this morning. Had a nice little pop right here. 1350. Looks like we did actually take out 14 there briefly, although we couldn't close above it. The interesting part here also, we are ahead of the high that we made in February, the last time this thing really got wild. We are extremely overbought here on an RSI basis. Almost 80, 79.6 here today. So Lunar going to keep rolling. Now this here, one of the reasons that we're seeing some of these outsized moves here is because of the short interest in some of these stocks. It's something we have covered a lot recently on some of the whole space theme. Kind of do want to ask Tim Melvin what he thinks about the space theme. We'll see how that goes. Anyway, short interest here, likely driving the huge move in Lunar, and this also will be on deck for us to day trade here today. This thing has been great recently. I would not be shocked to see this be another really great option here today. So Lunar looking pretty good. Did you guys have anything on it? PL, Lauren, we can take a look at that. We'll go put PL on here. That is also on our space watch list that we made. Okay. Yeah, that was kind of a mess. I'm sorry about that, thinking about it. Doing the best I can, though, with what's going on there. This definitely good. So I'd like to hear, first of all, are you folks still holding Lunar? I can't remember if this is just kind of a day trade for you folks or if you guys are swinging this. Let me know if you're still holding it. If you're not, let me know if this is something that you're interested in trading here today. We can also take a look at Rocket Lab real quick, see if what that's doing here. Rocket Lab looks like this is up another 3.2% here. So it looks like we really kind of so yesterday had a pretty nice day. We did sell off into the close. Now we've drifted higher here in the pre-market. So we'll see if we can end up continuing to trade higher here. I would imagine that this is also being buoyed by Lunar's earnings report. That would make sense to me. We might be able to get another option for trading this here today as well on Rocket Lab. Short interest on Rocket Lab, not nearly as high as Lunar, but still significant enough to potentially create some squeeze action on this. Just under 17% of the float shorted, but a days to cover of around 5, just under 5 here at 475. So, okay. That takes care of Rocket Lab. And was there any news on Rocket? I don't think so. No, but we did have price target raised to 30 from 10 at Bank of America. Okay, so I must have missed that one. I must have missed that one this morning. Sorry about that. Big price target raise here from Bank of America, literally tripling that. And we're only $10 away. We've seen a lot of these stocks really kind of go to the price targets very, very quickly. I'll be interested to see if Rocket Lab can end up making its way to 30 here today. Top aerospace stock up 350%, but valuation looks stretched. Yeah, you think? Valuation has looked stretched for a while. Fundamentals really have not seemed to matter a whole lot. New 52-week high on Lunar. And is that also the case on Rocket Lab? Let's take a look here. Yes, it is. So new 52-week highs on Rocket Lab and Lunar. We'll see where these go here today. Looks like this was up towards 2250. One thing for a trade here is if we break down into this gap, I could see this kind of getting a little crazy today, but we'll see if we break down. It should have enough strength. I'm creating a Tim Melvin fund for myself starting today. Well, there is no try. You got a good start at that with the whole sizzle, did you not? Full disclosure, I got hammered on Sidhu space after dilution. Oh, well, you can't win them all. Indeed. GME, y'all. Okay, so wait. Oh, good morning. Nick, are you talking about GME or was that a typo? You're just trying to say good morning here. Is GME doing anything? I don't think it's really doing anything. So I think that was a typo. No problem. We'll keep moving on. Lauren, you wanted to take a look at PL. This is Planet Labs. I believe this is also on 13's space watch list. I know that this is on my little extended space watch list, which has a lot of different stocks in it. You can see here what PL did right to the 500-day. Stocks up 3% here in the pre-market. Yesterday had a really nice rise in the morning and did a really good job holding its gains. I didn't think there was any news on this. No news here, but this is going to be one of the smaller stocks. If you want to kind of play the space theme, at least while it's hot, this is going to be one of those smaller stocks that you're going to be able to play here. Earth Imaging Company. Company provides daily satellite data that helps businesses, governments, researchers, and journalists understand the physical world and then take action. So here you go here. Ticker PL, Planet Labs. This looks like this is in play here today. And I'll tell you what, a break above this 500-day, which just happens to be right at the round 3 level, that could juice it. Okay. That's PL. Next here on the list that you folks wanted to take a look at is going to be MicroStrategy, perhaps one of the biggest Bitcoin plays here. Big B's, let me know what you wanted to talk about here. We were talking yesterday about, we had someone in happy hour ask, is this the start of a correction? And I think as we kind of talked through it, we understand that some of these Bitcoin names are likely to be more volatile than some other names that we're accustomed to trading. So to me, a healthy pullback is actually not a bad thing here. I don't necessarily want to say that this is a correction, just kind of more a healthy pullback. And looking at the morning here today, it looks like that's exactly the case. So we are up 3.5% from yesterday. If we look inside here, you can see we did not keep breaking down. Here's exactly what we wanted to see for some more bullish action here on MicroStrategy. Big B's, I'd especially like to know if you are playing this with options, with some short-term options. You have been spot on with some of your Bitcoin calls recently. And now, looking at the daily chart here, the area that we really need to hang on to here is going to be 323. I think if we break the bottom of yesterday's candle, the intraday low from yesterday, I think we probably maybe even test the downside here at 300. If we break beneath 300, maybe we even fill the gap down to 270. Big B saying Bitcoin seems to be recovering this morning and will likely drill back to previous levels and then pull back. Okay. So Sean Michaels, I bought MicroStrategy at 328. Hopefully you're paying yourself on the way up and at least booking some of those gains. Really appreciate it. Hugh, you're welcome. We're going to keep trying to do that. Hugh, I appreciate the compliments. One thing I will say though, always looking for feedback. So if there's something that we can do better, let me and the team know and we will go ahead and work on that. Before we get to Tim Melvin here, I did want to mention this. I'm glad you guys were bringing up the quantum computing computing stocks here. QUBT, right? This was one of the big movers from yesterday. Indeed. Now, first of all, okay, whether or not this company is going to be successful with all of their quantum goals, that put that aside for a sec. Today, just based on yesterday's trading action, this is definitely going to be in play for some day trades, just based on the relative volume. So I know we pushed higher here today. We'll see if we can break out from 4 pre-market high here, 436. But the reason that this is moving, wait till you see this. The reason that this is moving, yesterday, intraday, this got a price target raise from $8.25 to $8.50. So, of course, that would make the stock trade up over 100%, right? Just doesn't make a whole lot of sense here. Be careful if you're going to trade this one. It is moving. It is in play here today. Really quick, if we look at the history of this Ascendant Capital, the firm that came up with the price target raise yesterday, you can see that they actually had price targets higher than this in the past. At one point, it was $9. They lowered that to $8.75. Then they went to $8.25. Now they've gone back to $8.50. So just be careful here. This is going to be in play. This is going to be a day trading target, but that's why it ran. Found that a little comical. All right, it's just about 8:30. I know we didn't get to it yesterday. I know we didn't have the Melvin Wednesday, so we're going to make it a Melvin Thursday this week. Let's go ahead and bring him on. Tim Melvin is our special guest here this morning. Tim, how you doing?
I'm doing great, Ryan. Good to see everybody. Sorry we couldn't make it yesterday. Had some conflicts, but here we are today. And got a bunch of all kinds of stuff. So
you got all kinds of stuff. Okay, so let's do it. We have plenty of time, and Tim, honestly, this might have been better. We don't have a whole lot of news flow other than this PPI print coming out in 3 minutes here. So let's go through what you wanted to talk about. I do have a really quick question right off the bat here.
Let's do the question.
What do you think about this whole space theme that we're seeing with Rocket Lab and Lunar and all of these stocks that are just making gigantic outsized moves?
Again, you're trading the story, okay? There's no profits. There's no debt. There's no possible way to define who's going to win this thing other than, of course, Elon. Elon wins. And for the next 4 years, Elon wins big. SpaceX is far ahead of everybody else. So you look at these other companies and you consider the regulatory burdens that are going to be in place, the restrictions, the qualifications, everything. So you're trading the story, right? And that's all you're trading. This is not a business where you're valuing cash flows. So you 100% technical indicators, because there's nothing else to go on here. So you're trading the story, and the day that somebody stands up, and I'll take some heat for this, and it's okay, I can take it. The day somebody stands up and says, hey, the emperor has no clothes on, these will all dive. Until then, clearly, only a moron would say, don't trade these. They're skyrocketing.
Yeah.
So, if you've got, and again, Ryan, we've talked about this. Really, if you look at the volume breakout, and I've got some more to say about that as we go on.
Sure.
When you get some of these stocks that are just all of a sudden breaking out on these big volume surges, like you see right back in here, where is it? Right about towards the 1st of September. Yeah, you're getting in the neighborhood. You can see what I'm talking about. The stock's breaking off to new highs on big volume swells. If you're going to trade a story, I don't know that you can look for a better indicator than that. So
Tim, I'm so glad that you said that, because literally the crux of the trading plan here day to day is volume expansion.
Well, we've got a lot more to say on that today. So.
Okay, perfect. This could not. It's almost like we planned this, but this could not be any better.
Okay, so one of my endearing qualities is that I'm a total geek.
Mine too. I consider myself a nerd. So
I have been referred to as the world's only, perfect redneck geek. So, because I'll come home from the gun range and sit down and read academic studies. It's, it's a little weird, but I'm indiscriminate about my reading. I'm a deep value guy at heart. Okay. But I don't have the only nice house. And I know guys that have made as much money as I have or more money than I have. That do things differently than I do. Now, I think value is probably the easiest for long-term investors to use, and it certainly fits my personality. But I read about everything because the more I know about everything, the better I am at my one or two things. So one of the studies that I ran across was by a Swiss group, Concretum Group. They're in Lugano, Switzerland, I believe it is, and it's a fellow by the name of Carlo Zeranetti. Let me make sure I said that right. Younger guy, but yes, Zeratini. I'm sure they say it's Zeratini over there. They're big on their vowels.
To me, it sounded good, Tim.
Yeah, relatively young guy. Econ degrees from University in London, Imperial College. Quantitative and finance and mathematics degrees from universities in Switzerland. So very bright guy, and he does market studies, and he did a couple specifically. You guys will love this because it's about day trading, and he did two of them because, look, let's cards on the table, right? Everybody knows this. Most day traders lose money. It's just a fact. And you can argue about it and say, no, that's not true. Well, yeah, it's true. And this percentage that actually make money at this consistently is tiny. All right. So when I see something that says, well, wait a minute, if you do these things, you can actually do okay. What really made me interested in this is it's based on the work of Toby Krabal. Okay. Now, Toby came out of Victor Niederhofer's shop in New York, like so many successful traders did years ago. And he wrote a book on a theory called opening range breakout, or ORB. Orbs. And Toby, this was his concept. He developed it pretty much. And he was the first one to write about it, and he quantified it. So this is kind of based on that work. So there's two systems that they laid out there with their team at Concretum Group. And they're both based on opening range breakout. The studies cover from 2016 to 2023, which is not a huge data set, but they do examine every single trading day. So here's what they found. First one, really simple rules. We're going to trade the QQQ initially. If the first 5-minute bar, all right, is up, you go long. If the first 5-minute bar is down, you go short, right? You have to be so lightning flash trading quick to be able to trade the open of that next 5-minute bar if it's in a counter direction. So the rule is just simple. That first 5-minute bar is up, you're long. First 5-minute bar is short, is down, you're short. You use a stop if you're long at the bottom of the first bar, if you're short at the top of the first bar. Now, this thing
interesting. Okay.
trades every day. Now, if you use the QQQ, you're going to miss a lot of fills. You'll never get the perfect allocation. All right. That's what they found as they went through. So a lot of times you'll have on like 60% of what you should have had for the day. So he prefers to use the TQQQ, which is a triple one. And here's the thing. It's 795 trades, 51% long, 49% short. Okay. So you're on both sides of the market all the time. This is a really market neutral strategy. All right. With the TQQQ, you earned about 48% a year. But now here's the thing about this, right? This is incredibly rules based. You break the rules, you're out. You play the game of, well, the first 5 minutes was up, but the second 5-minute bar opened down. So I'm just going to go ahead and go short. You're going to lose money, right? You got to do exactly what the rules say to get anything close to the results. It's incredibly rules-based. It does not allow for second thinking. It does not allow waiting for something to come back or for a better fill or any of that. It doesn't, there's no adjusting the stops. The rules are there. You pay attention to the rules. You should do extremely well. Now, the second one I found even more fascinating because it gets into your relative value. They looked at opening range breakout, same rules. First 5-minute bars up, second 5-minute you go long. If the bar is down, you go short. So they looked at stocks over $5, million shares a day in volume. 14-day average true range had to be over 50 cents, so you had a shot at making some money here. And again, same stop rules, same exact stop rules. and a second stop at 10% of average true range, just to be safe. So if your stop does not get hit, you stay in the position to the end of the day. Maximum loss is 1% of account value, and both systems use that. So you're going to adjust your trade side. So if you get stopped out, you don't lose more than 1% of your account value.
Gotcha. Okay.
Right? All right. Now then, if we use all stocks, right? And this thing sucks. That's a technical term, guys. Write that one down. It makes about 3% a year. Okay. So they came back and said, no, wait a minute, this stuff's supposed to work because it is kind of the basics of stat arb. So what they did is they started to look at relative volume, right? And the higher relative volume was, the better the returns were. So if you had relative volume in that first 5-minute bar that was over 100%, this thing made money. Now, so what they came back and they said, well, hell, we can't trade them all. We're not flash traders, with a black box wired next door to the exchange. So they took the 20 stocks with the highest relative volume of the first 5-minute bar, and they only traded those. So you've only got 20 positions on a day. So now again, you got to be quick. You got to be quick. You got to be fast. You got to be disciplined. This is not an easy system to trade, but again, it cranks out about 40% a year. The difference here between average day trading that scratches to break even and making 40% a year is 100%, same rules, same everything else, opening range breakout and relative volume. It's a powerful combination. So, if you want to improve your day trading results, you've got, and again, sorry, some of you get mad at me. You got to start ignoring the news, ignore what you think, ignore what they're saying on the TV, and get a very disciplined numerical. And you could probably build this in Pro, if I'm not mistaken, or at least have most of the tools to do this. And by the time Ryan and I are done with Pro, you will have everything. This thing will come out and scratch your ear while you make the trade. But just these are the type of rules-based, no bias systems that you need to succeed as a day trader. And again, that's a really unpopular opinion. I know a lot of really wealthy day traders, guys. It's all rules-based. Their bias and opinions don't get into it at all.
So a couple of things here. So first of all, you're absolutely right about rules-based system, especially for day trading. The successful day traders that I know all have very, very rigid rules, and they never bend them. And if they do bend them, they end up getting punished and they end up learning a lesson from it. But it might not be as unpopular as you think. Nick from our chat here says, this is essentially how I've been trading options the last 2 months, and my portfolio has doubled. So obviously, some of these rules here are onto something. Now, Tim, really quickly here, I just want to mention it here. SPY is selling off a little bit. We did get the PPI number. I really quickly want to read that for here. PPI year over year for October, 2.4 versus the 2.3 estimate, so a little hot there. Month over month for October, in line, 0.2 versus the 0.2 expectation. The prior read was 1/10. USA core PPI month over month for October, in line at 3 versus the 3 estimate, 0.3 versus the 0.3 estimate. And then the initial jobless claims, 217 versus 224. That was a little light. We'll see what that gets revised to. And the core PPI year over year for October, 3.1 versus the 3 estimate. So just slightly higher here on the wholesale inflation measure. Tim, I know that you don't necessarily do the day-to-day stuff. Do you have any thoughts on the PPI at all? Totally fine if you don't. We can just.
No, of course I do. I mean, it's. I follow economics pretty closely. It's it's kind of like history with me. It's sort of a hobby. Look, when we look at what's going on in the economy, all right. Yes, we want lower rates. We want to see the Fed lower, but we're not at 2% on inflation, and they're not able to push it under 2 in spite of the fact that energy's cheap. Right, this is the single biggest component of supply chain costs, and it's been beat to. And we're still not getting inflation under control because services inflation is still hot, rent inflation is still hot, all of that's still in. So the CPI, the PPI are above the target levels. Now, an unpopular opinion number 3012 for the morning. We don't know what the hell is going to happen to prices when they start slinging tariffs around. Okay. But I can tell you that I can't find an instance in history where we've done it where prices didn't go up. So And that's what you look. If you go look at the bond market's in a downtrend, and it's in a downtrend because it's really concerned, and was concerned about both candidates. But but my point is Donald Trump doesn't get a pass here. Lower taxes, tariffs, and a lot of the things that he's talking about are inflationary. So CPI and PPI, you got to keep an eye on those numbers, guys, because the battle against inflation ain't over. You will probably still see the Fed lowering interest rates, because one of the few conspiracy theories that there's two that I believe completely. The first one being that the federal budget component of interest payments is too high, right? It's going to be $1 trillion over the next 12 months. That is as much as Medicare, is as much more than defense, actually. Okay. That is not sustainable. It's like 17% of tax revenue. So you've either got to cut spending and raise taxes, or you got to lower interest rates. Now, it wasn't going to happen under either president, but it really ain't going to happen under this one. We're not going to raise taxes, and he's not, he will be on Jerome Powell's lawn with lunch and a mariachi band, and he won't leave until he lowers interest rates. Okay.
Yeah. I'm with that.
So, you got to watch these numbers, because they are going to play into the market, because they're going to heavily influence what the Fed does. Anything goes wrong in the commodities markets. Remember, if food is low, when you look at grains, they're still very low. We have not reversed trend yet. So some of the biggest components in the supply chain are cheap, and we still can't get inflation under control. So you have to be at least modestly concerned about that number.
Okay. And it looks like that's exactly what the market did here. It did sell off on that number, although it is getting bought back. We'll see what happens when we open and the volume shows up.
Guys, let me just check here where they are. Or maybe you could do it for me. Where's the TLT this morning?
Yep. Actually, someone wanted me to ask you about the TLT. This is a perfect segue here. TLT currently sitting at 89.87. That is actually lower from the PPI print.
Okay, guys, look. Here's what you got. You got the S&P 500, the QQQ, all the market indexes, right? Comfortably above the 200-day moving average, which, even Paul Tudor Jones says that's your single best indicator of trend. Okay. And I'm not going to say it's your single best, but it's a pretty good one. And that's what we use for our purposes. You got stocks in a really strong uptrend, but you have bonds back in a downtrend. Okay. This does not happen often. It has to resolve one way or the other. Either bonds through lower interest rates go back up, or stocks are going to come back down. So the bond market, if you keep an eye on the bond market and just kind of look at the yield curve and where it's going, it's telling you, yeah, we're not sold that we're going to get through this without inflation. So I think that Donald Trump's economic policies are going to be a huge plus for the markets, and we're going to talk even more about that here in a second. I think that there's a lot of plus there for business in the stock market, but it's not going to be all sunshine sailing into the land of cotton candy. All right. There's going to be bumps and bruises and inflationary pressures and issues to deal with, and that's eventually going to show up in the markets. And these first 3 or 4 months, you've still got all kinds of money to be spent. You've still got all kinds of government spending programs, and all of those just keep adding to inflation. And the bond market's telling you need to be worried about it.
Okay. Lion, let me know if that answers your question here. Jonathan also saying key level here for the TLT. Let me see if I can grab that 91.04 to the upside here. So there you go, Lion. All right. Where'd you want to go next, Tim?
All right, next. The one positive about this, and this warms my heart, there is no friendlier president ever that I can find. Maybe Bill Clinton, but it's a contest that's friendlier to the banking industry than Donald Trump. Okay. Now,
and banking industry is your wheelhouse. So.
That's my wheelhouse. This is my wheelhouse, right? We did really well from 2017 to 2020. Okay. Now we're just coming off a 4-year period where you have an administration that was, and again, I'm not trying to be overtly political here, but the fact of the matter was hostile to the banking industry. Did not like banking, was pretty sure that bankers were evil. They watched It's a Wonderful Life, apparently, and it stuck with them. So
it's almost that time of year for It's a Wonderful Life, as it turns out.
So, yeah, every banker is Potter in his wheelchair, keeping poor George down. And you had regulators who believed that that was their job. So in the morning, they got up and they went to work and they regulated, and they overly regulated, except for their friends who happened to run the 4 banks that failed because they totally ignored the stupid stuff they were doing. But you had mergers that were canceled for no good reason except they could. Merger time went from 6 months to over a year for the few that were approved. So we were incredibly hostile to banking. We were hostile towards M&A. So we put them together. We were really hostile towards banking M&A. So the Trump administration will come in. They will cut regulations. We will not see a 20% increase in required capital levels for larger banks for Basel III settlement. It'll be somewhere between 10% and 0. The latest proposal is 9. The industry seemed like, no, because Jamie Dimon flat out said, post Chevron, which was a Supreme Court decision, we're going to take this to court. We're going to push them and we're going to win because the regulators are doing things that were not authorized by legislators. And he was right. And I was excited about it. I was really looking forward to seeing that battle because it would have been a definitive answer. Right now, we've got to go all the way through the next the next administrations. But the regulatory environment is going to be much friendlier for banks. Okay, so that's one thing that's out of the way, but the M&A environment is going to be really favorable for banks. Now, the consolidation trend has been present in banks, guys, since the 1980s. It was Bill Clinton that poured gas on it in 94 with the REAL Act that allowed for true interstate banking. When this started under President Reagan, we had 18,000 banks plus a bunch of savings and loans and credit unions. Today, we have about 4,000 banks and 2,700 credit unions. Okay, it's too many. We don't need that many. For comparison purposes, I think France has like 300. There'll be small niche banks, but we're probably going to end up at the end of this, maybe 1,000 banks nationally. It's the number that's in line with what we need. That's going to be the most efficient, because banking, like so many businesses, has become a business of scale. The higher your asset level is, the higher your profit margins are, right? Because you have a much larger cost structure to absorb fixed costs. Yep. Okay, so banks and let's add on, the economy is going to grow plus or minus 2%. There'll be variations all over that, but if you go back and you average this thing out, that's where you are. Between 2 to 3% for an economy our size is a really good growth rate. Okay, there'll be bursts over it, there'll be times under it, but that's going to be around your average, which means it's really hard to grow a bank as a public bank in a 2% growth economy. Now, there is not an investor on the planet that is going to accept long-term earnings growth of 2% and want to own your stock. So how do you grow? You buy another bank. Because when I buy a bank, if I'm bank B, I've got 10 billion, and I buy bank C down here, that's 2 billion. I can take out automatically about 30 to 35% of the fixed costs. Okay. So, but then my return on assets is 2. His is 25 basis points. So the amount of profit that I get off these assets is like 10 times what they're getting off of it. So I buy this bank, I add it to my bank, my profits jump up, and I have the growth that I need. There is massive pent-up demand in the banking industry for both buyers and sellers. On the sell side, being a small banker is not fun right now, right? You've got the regulators, you've got the scale, you've got technology, you've got cybersecurity, returns that used to be an easy 15% ROE, they're not. And you're not attracting the best and the brightest. A lot of banks that were founded in the 90s, and there were a lot, the founders are now 65, 70, 75 years old. They're looking for a door. So there's a succession issue. There's nobody to come in as far as talent to run the bank or that wants to run the bank. And there is a liquidity event, desire, shall we say, in the industry. So you are going to see an explosion of bank M&A activity over the next 4 years. Hopefully, it's as much fun as 2017 to 2020 was, because that really was a lot of fun. I mean, we, out of a 40 to 50 stock portfolio, we were having years with, between 15 and 20 takeovers. It was just like a joke. You'd come in, you'd come in on Monday. It's like, who got taken over today? It's like holy crap, what's wrong with the world? We had no deals this week. And we are looking for exactly that level of activity. And I may actually be conservative because the last 4 years have been brutal. And I think you're going to get up to probably the 20, 30 billion in asset size where you're also going to see a lot of deals. So there's going to get deals done in here. It's something that we're going to talk a lot about. I've had the service on MarketFi with small banks forever and ever and ever. And we've done extremely well. But it's coming, guys, and it's going to bore the hell out of you. You can't day trade this stuff. Some of the larger ones that we'll talk about, maybe you can, twiddle your position around, but mostly you're going to be buying on down days and holding until you get a deal done.
Okay. Look, I know I day trade every day here, but honestly, my favorite types of trading are ones that are just more passive. So I am all about this. I do have a couple of questions here real quick, Tim, if we can go with that. Thinking about it here from the chat said, ask Tim, let me get this right here. Ask Tim, he mentioned William Penn buyout last time. Aside from banking crash, it traded with 1130 support and buyout was only at book value at 1380. Not a big premium here for long-term holders. So what was your question for him? But go ahead, Tim.
No, I'm sure you wanted to comment. That was a crappy. I don't know how else to put it. That was a crappy multiple, man. It really was.
Yeah.
And again, I think William Penn. That was a thrift conversion from 3 years ago. This was we want an exit strategy, and they took a bank where they felt like in mid-pen, where they felt like they were getting a currency in mid-pen stock that would continue to go higher over time, that would expand the presence in the Pennsylvania marketplace and would give them an exit that allowed them to profit going forward. So I think that's, kind of was the biggest factor, but I was very disappointed in the deal, obviously. I mean, I own the stock at 8, so I'm not whining. I made money. But, I really felt like I should have made a lot more. And again, when the deal was announced, there was still a lot of uncertainty as to who is going to be president. By the way, if you're going to do these, okay, take your technical analysis book, set it over here, and don't look at the damn thing until you're done buying your banks for the day, okay? Because they're not relevant at all. There's one thing. There was 3 numbers that matter. I'm going to give them to you. Write them down. None of you are going to do it, but it's okay. It's price to tangible book value. Okay. Lower is better. It's equity to assets. That's how much equity the bank has relative to the total asset base. The higher the number, the lower the leverage, right? Therefore, you with me? Higher is better. You want less leverage in a bank, not more. Okay. So equity to assets, price to tangible book value, and then you can come over to non-performing assets. That's bad loans, repossessions, all that. You want less than 2%. And again, lower is better. All right. So if you just use those 3 numbers, you'll be fine. And the only time you'll sell is if you see that 2%, that non-performing asset number get over 2%, or the equity to asset drops under 7. Then you're just gone because the risk profiles change. That it's rare. It's really rare for the type of banks that you would find trading below book value with lots of capital. So, but don't use technical analysis on these. They tend to be thinly traded. It's kind of pointless. Just use the fundamental rules. So. I didn't like the William Penn deal, and it's similar to a deal years ago, Charter Bank down in Georgia, where they bought back over 50% of the stock coming out of the gate after the thrift conversion, and then they sold it for a fraction of what they should have. And I was just like, I wanted to drive down to Georgia and take a baseball bat to somebody. I was so angry. I was just livid. But occasionally it'll happen. But here's right now, average deal is about 1.25%. In other words, the average buyer is paying 1.25 tangible book value for a bank. That has been a very subdued multiple. It's going to go higher as deal activity picks up. Remember, this is a complete and total sea change. In that the Biden administration, the regulators there under the FDIC had just passed a whole new set of just incredibly restrictive M&A rules and filters that they were going to apply to deals. And that was really capping deals and capping multiples. Those are out the window now. I don't even know why they bothered doing that until the new administration came in, but they're not going to survive the first light of a new body of Trump-appointed regulators. So multiples will go up from here.
Okay. You got any goodies for us today?
Of course. Let's jump right in. We're going to go first with an old favorite. This is LSBK. And this is Lakeshore Bank Corp. It's in the Lake Erie area. Dunkirk, New York is the hometown of this lovely financial institution. It is not a large bank. We have a whopping market cap of 77 million. Only trades a few thousand shares a day, so use a limit order.
I was going to say I can't even pull this up.
Okay, yeah, well,
I can't even pull the chart up on this.
I can get it up on.
There we go. Nope, there we go. Sorry.
Yeah, it is a small bank. Now there's a trick to this bank. All right, because when we look at this bank, we say, $15.67 book value. That's pretty good. Trading around $13.95. It's been moving up. Well, that's pretty good. But this is a mutual holding company bank. Now, what that means, Ryan, is the mutual holding company is the largest shareholder. Okay, so they were a mutual bank, 100%. They did what's called a first step offering years ago. So they're partially public. Most of the stock is owned by the mutual holding company. They use that stock in calculating earnings, in calculating book value, and everything else. And every quarter, the mutual holding company board has to vote to not receive part of the dividend or to any of the dividend. Okay, so it looks like the multiple's high and price to book is just okay. Truth of the matter is, the only thing that they can do with this stock is sell it. And someday they will sell it. All right. When they sell it, all that cash gets added back into book value. So the fully converted book value is between $22 and $23 a share, depending what price they get for it. So a deal of 1.25 times book would be at $28.50, or roughly twice the current stock price. In the meantime, you collect, what is it, a 3.7% dividend at the current price?
Actually, this looks like 5.3% here. 5.3% yield on this dividend there. And I was also looking tangible book value on this 1566. It's trading under tangible book at the moment.
Right. That's under pre-converted tangible book, because if they did the second step, tangible book value is going to be well over 22%.
Okay.
Yes, the dividend. Yes, you are correct. It is over 5%. They just raised the dividend. So there you go.
Good stuff.
So great bank, solid loan book. It's a diversified loan portfolio, 0.57%. That's 57/100% non-performing assets. Lots of capital, Ryan. Plenty of excess capital. There would be more if and when they eventually did the second step conversion. I can tell you that there's a couple of activist shareholders in this thing that really would like to see this bank sold. Coming into an area where buying deposits is going to be a solid reason for takeover to get sticky, loyal deposits. This is going to be a really attractive bank up there in that corner of New York State. So we like to, and then look, it's going to bore you, but you'll get 5%. Okay. And there will be times in the next 4 years where 5% is going to look like all the money in the world to you. I think. Okay. So,
and we've got 2 minutes left here, not to be greedy, but do you have another one for us?
Come on. Yes, Federal Financial, CFFN. This is an old favorite. It's located, Ryan, in the booming metropolis of Topeka, Kansas.
Oh, okay. I've spent a month there one night.
Yeah, it is in fact that kind of town, and it's a fairly small town rural bank. Just get the total liabilities and equity up here. Total equity is right around $1 billion. Total assets up around between $8.5 and $9 billion. So this is a relatively small bank. However, lots of capital, non-performing assets of just 0.11%, trading below tangible book value. And again, these are sticky deposits, right? This is the beautiful thing about small town banks. The deposits, they're not going anywhere. And let's just see, 90% of all the deposits in the bank are insured compared to an average nationally of 69%. you hesitate to go risk free, but this is pretty damn close. Okay. This is a small bank with a ton of capital, paying a nice dividend. The loan book's almost entirely single family mortgages in Kansas, right? Just so you know, there's not a lot of modified upside down mortgages or stupid loans being made in Kansas. It just doesn't happen. So
that makes sense.
it's I'm sure you've got reasonable loan to values, and so, and again, sticky deposits. They've got branches up in and around Kansas City. So look, guys, if you're not a Kansas City Chiefs fan, I wouldn't buy this bank because I'm sure they got Kansas City Chiefs stuff hanging on every branch. But
so I'll say this: I actively root against the Chiefs, but I might still, if this is going to make me money, I might look past that. This also is a 5.5% dividend. By the way, Tim, it looks like you're making waves here. I'm going to name my Melvin portfolio the Boring Port.
As you should, right? Charlie Munger once said, it's supposed to be boring. Right? If you want excitement and you want a good time, go to the racetrack, have a cold beer in the sunshine, stand on the rail and yell. Go to the casino, get free drinks and look at the dancing girls. That's where you go for your excitement and you want to lose some money, right? Investing's supposed to be boring. Bank investing in particular is incredibly boring until that day that you walk into your office and 3 of your 20 banks got taken over. And I've had that happen before. It's a very good day and it's pretty exciting.
Yeah, it is. It's a very good day. Well said. All right. Tim, that was awesome. We got more than we bargained for. We're going to have you back next Wednesday, right?
Everything looks like we should be all ready to go next Wednesday. Hurricane dependent.
Okay. Well, I'll tell you what, you keep in contact with me. We'll make sure that weather allowing, we get you on here.
You won't have to worry about a thing. If we get a 4th hurricane, you just look out on your front porch. I'm there, buddy.
Okay. Sounds good. Tim, thanks so much for all of your insight. Really appreciate it. Have a good rest of your week. We're going to see you next week, right, boss?
Thanks, everybody. We'll see you next week.
Take care. That is Tim Melvin, the one and only Tim Melvin, by the way, handing out a whole bunch of winners. Look, I know we're here. We are an active trading group, but I'm telling you, don't be afraid to put some of these slow things in your back pocket, in your portfolio. You will not be sorry. That's one of the things that I do. Really good stuff there. We really appreciate Tim. And Tim leaves an open spot for the other one and only, this time 13. 13, good morning. How are you doing, dude?
Well, you know what? Just slow can grow. So go ahead and
look at this. We bring 13 on and he's already got a dad rhyme for us. Slow can grow. That's going to be the motto of the Boring Port, right, Nick? The Boring Port.
Yeah. Hey, just go ahead and dock up in the Boring Port and watch slow grow. But yes. So just watching that segment, that was really good. I like those names that he gave us. And if he does get a hurricane, we'll also be looking at Generac as well. That seems to really move whenever there's a hurricane that's coming. So almost a 200 on that stock, by the way. How's the morning been?
Yeah, that was Generac. This is awesome. We've been talking about this as a hurricane play since the last couple. Also mentioned Home Depot and Lowe's. All 3 of those stocks have performed pretty well since we did that. Okay, 13. Let's just get down to brass tacks. I know we've got some movers. We just spent a long time talking about some slower, more investment type plays. Now let's kick it up a notch and talk about some of the day trading targets here today. Before we jump into the movers, I wanted to give you an opportunity. Do you want to talk at all about the level that we're at here in SPY in general, or the PPI print that we saw here this morning?
Not really.
I love the honesty. No, I don't really care about that.
Because yesterday when we were talking in Happy Hour, I outlined about how I think we're going to get a whole lot of the same that we've been getting all year, where we make these new all-time highs, we consolidate and go sideways for a time, maybe make a slightly higher high or dip down a little bit, but eventually we end up rolling over, selling off a little bit, basing, and then we rip to new all-time highs. We've done that like 6 times this year alone, and I just think that we're just setting up to do it another time. So we're in the consolidation period. I expect it will maybe sell off a little bit, but we're going to base and then rip higher. That's kind of been how it's been for almost the entire year.
Yeah, you could see it right here on the chart. Okay, good stuff there. Let's go ahead and talk about the movers. We flip over to my movers tab here. Get the chart up. We're going to start here with UAVS. And when I sat down at my desk, this hadn't been moving yet. AG Eagle Aerial System shares trading higher after the company announced 17 new purchase orders of its EB tech drones from U.S. defense and security customers. That's ticker UAVS. This stock was about $1.60 yesterday, $3.35 here today, up over 100%. 13. Did you take a look? Did you prepare for this one? Is this one on your list here? This is under 1 million shares in the float, so this one should be wild.
Yeah, this one was the first one that showed up on my list here. So 17 new orders. Now, I tried to look into that a little bit to see if I could find out what the value of those orders were. Didn't have time to see if I could locate that. Looked up the actual drones that they make that they're selling. They go for, about 15 to 25,000 each. So I don't know how many are on each order, but at that price, they probably should be able to rake in a good amount of money on those orders. So we'll have to see if when those more details come out. But they do have 850,000 shares in the float. So we're really easy to move this thing around. And the reason for that is because they did 2 reverse splits this year. They had a 1 for 20 on February 9th, and they had a 1 for 50 on October 15th. So 2 reverse splits this year. That has resulted in a very high short interest with a very low day to cover. My last read was 31.82% of the float shorted, only 1 day to cover. This company still does need cash, so that those orders should help them out with that. So I don't know if they're going to try and raise more capital before they get paid on those orders or not. But one thing I did find out that was pretty interesting is that at the end of October, Bank of America completely exited their stake in this company. So I think they made a little bit of a mistake there, seeing as how we're ripping over 100% today.
Okay, real quick here. Regarding that days to cover read that you're getting, the average 10-day volume has really stepped up recently, like orders of magnitude stepped up. That's why you're actually getting this low reading here. But again, that as long as the volume's there, those shorts should be able to cover up here. Okay, really good stuff there. First one, UAVS. The next one here, this one's going to be fun. JXJT. And interestingly enough, this is one that I have been holding for a little bit already. This is a small China name. We have been talking about this in happy hour. We've got some guys that do some research on the dumpster dive. JXJT. This is popping here today. I didn't see any news. Didn't see any fresh news on this. Big volume sticks here, especially recently. 13. Do you have anything on JXJT?
This was one of the ones that, like you said, we got from happy hour that I really didn't take a look at or really get into. I don't want to just completely go diving into all kinds of different stocks that could end up getting you hurt. So I did take some of those, but this was one of the ones that I didn't take. Has 5.69 million shares in the float. I would imagine if I look at the financials, they're probably going to need cash. They only report their earnings 2 times a year. Don't see anything. I don't have any read on their earnings. They actually are supposed to report their first half earnings in 12 days. So we'll see if we get that. But when I look at their balance sheet, they have about $400,000 on the balance sheet. So I'd imagine they're going to need to raise cash.
Yeah, it seems that way. The CEO here, their compensation is basically almost all stock. So the CEO here is motivated to actually have this company do well, or at least the stock price do well, which is one of the things that we're looking for here. So no news. JXJT, you can see there's been a big move here in the pre-market, selling back down to VWAP. We'll see where this thing opens up and where it goes. Nice little move here, JXJT. Now, next on the list here is one that we are all familiar with. 13, let me ask you, is it okay to start calling this one an ex-girlfriend yet?
No, because we're still dating it.
Oh, spiciness. Okay, BTCT still playing here. I didn't see any news on this either. This did pop as high as 28. It did come back into the VWAP where it's currently kind of holding at. Let me make sure that there was no fresh news here on this one either. What do you got? You got a plan on this one, 13? You got any big levels you want to share with the group?
I haven't. Well, I don't have a whole list of things I was going over because I was talking in the happy hour chat. about that, about some other names that could potentially do well, and I can mention those too. But as far as BTCT goes, let's get closer to the open, and I'll try to identify some levels where it could run to. Now, I don't know how much more gas this thing has left in the tank, so it could do one of those things where it just falls right out of the open. Also going to be tied to Bitcoin, so if Bitcoin continues to push up, then there's going to be some hope left for this one. But we're down lower today in Bitcoin than we were yesterday, so